Hello, welcome to another episode of EPMS Tech Talk. I'm Chris Costa.
And I'm Joanne LaFlamme.
So Joanne, what should we cover tonight?
Well, I thought maybe we could talk about different situations where you might have a customer account that you want to maybe send the bill to a corporate account or maybe receive a payment from the corporate account. How would you handle that?
Sure. Yeah, we have a couple things you can do on the customer. You can actually map one customer account to another customer account if it's a child or a store to a corporate type of relationship. You can use either what we call a billing account or a statement account. And when you would use one versus the other really depends on if you need to bill the individual store, but then you'll receive the check from the corporate. You would use a statement account because you would want to send the invoice to the store.
Okay.
And then we have a consolidation function for using the statement accounts to facilitate getting the check from the corporate and pick all the invoices from all the various stores.
Okay.
If you want to bill directly the corporate, then you would use a billing account, and then it would just shift the invoice right away from, not going to the store, but going to the corporate.
All right. Well, can we take a look at the customer account and how you would set that up?
Sure.
Okay.
Okay. So I'll open up accounts receivable, and we'll go into the customer master file. And I've got two situations set up here. Dunkin' Donuts, account number 1000 and 1099. So the account 1000 would be the store. 1099 is the corporate level account. So I set this one up as the statement account. So if I go into the account 1000, under the miscellaneous tab, we've got the two fields we were just referring to here, the billing account and the statement account. So in this case, I mapped the account 1000 to 1099 as its statement account. So basically what that means is I can send out the invoices underneath account 1000.
Okay.
And when I'm about to receive payment, typically the end of the month, run a statement consolidation. That will take all those invoices and reassign them to the 1099.
Okay.
Okay.
Sounds good.
And then alternatively, we could use the billing account, which would be this field here. If there was another customer, you wouldn't use both together, but just for sake of argument, if I was to put the number in here, that would mean I wanted this account to be its billing account, so that when I did the order and created the invoice, it would automatically go to that billing account right away.
Okay. All right. Can we take a look at how that statement account works now that you've got it set up in the customer?
Just pop that back in there. Actually, I can just cancel it and save it. Yes. So we can go. Let's go through the consolidation. I'll take you through that. So
Okay.
we'll go through how we'd move the statements from one account to the other. So before we go there, let me just pop open the customer inquiry. So I'll just show you underneath account 1000, I've got 3 invoices here. So when I consolidate, it's going to take these 3, recognize that it's mapped to a statement account, and take these 3 and reassign them to the other account.
Okay.
Okay. Now, if I had, just to point out, because this may come up as a question, but I've got some other transactions underneath this account that have already been paid. They're already, their open balance is 0. Those will not transfer.
Okay.
Only the live open
Only the live.
transactions will.
Okay.
Okay. So the way we would do that is go under Statements. Just hit Consolidate. It's going to warn me. And I can hit OK. It's going to tell me that it recognized one account as consolidated.
Okay.
And I can go ahead and just hit OK. Close out. Now watch when I go back to the customer underneath account 1000, those transactions aren't there anymore. They've been shifted and they're under the corporate account. Okay.
Okay.
So now they're all into here. The idea being that when you receive the check, it's going to come from the corporate level, so you could punch in account number 1099, and then all the invoices are there to select.
Okay, that makes sense.
Okay.
So when you originally created those invoices, you sent the invoices to the individual customers, but then at the time of the statement,
That's right.
you can send them to the corporate.
So they would, throughout the month, they would stay underneath the
Okay.
individual account.
Okay. Well, now can we take a look at when you use the billing account, what happens?
Sure.
Okay.
And, really the primary difference, like we've talked, is really the timing of when you want to shift the invoice. So I set up another couple of accounts here, 1500, 1599. $1,500 is mapped to $1,599 as its billing account. So what's going to happen is when we close out a job and create an invoice, and I've got this job right here, so I'll close it out. Now notice the account number is $1,599. Okay, that's the store level account. So if I close this out, generate the invoice, it automatically puts the customer at $1,500 because it knows that you want to bill that particular corporate account right away.
Okay, so immediately it gets saved under, you'll never see it under the $1,599
Exactly.
account. Okay,
Exactly.
great.
So it's really just a matter of which account do you want to bill, and then which account do you want to get the check from.
Okay, makes sense.
Okay. Anything else?
No, that was great. Thank you.
Okay, perfect. Thank you. Well, this was another episode of EPMS Tech Talk. I'm Chris Costa.
And I'm Joanne LaFlamme.
Please look forward for more to come.